It's incredibly disruptive. You know, he's right. The spot rates, you look at the DAT national rate, it's gone down 19% in recent history, but it's actually down 35% from the peak a year ago.
A 35% drop. Now, we know these can sometimes be volatile and move around, but is that pretty unusual?
It is very unusual, in part because we had an incredibly strong year last year. And so like any good cyclical industry, we saw the industry add trucks, add drivers, add technology that allowed them to be more efficient. But now we're having that increased capacity face up with what is decreasing demand.
So the names in this space are down as well. Have they fully priced in the impacts now, as far as you're concerned? I mean, do you see any values out there?
Well, that's the real question. We continue to like names that are more oriented towards the e-commerce side because, you know, let's face it, e-commerce is going to continue to grow. E-commerce continued to grow through 2008 and 2009, not at the pace it would of normally, not at the pace that it does when the economy is strong. So we continue to like names like the FedExes and XPOs of the world. However, that said, there is continued downside for many of the names, whether they be in the trucking or railroading space.
Well, and is this a double whammy of sorts? Because those names often come up in conjunction with Amazon's latest efforts to build out its own delivery systems.
Well, that may be true, but what happens, of course, is that Amazon's just doing what any large retailer does, and that is build out their infrastructure, their delivery infrastructure. I would remind everybody that, you know, Walmart has 8,000 trucks and dozens of distribution centers and tens of thousands of trailers, yet they're also the largest customer of most of the large trucking companies. So I think there's been too much made about Amazon's willingness or ability to compete with the rest of those in the transportation space.
And finally, Donald, if we have an issue where all of a sudden those volumes rebound pretty quickly, I would imagine the stocks snap back, but there's no visibility on that right now. So are there any other levers these companies can pull?
Well, I would disagree with that, first of all. There are levers to pull, but I would disagree with that. You know, if we look at, say, the FreightWaves sonar platform, I don't know if you had time to prepare the graph we've sent over, but, you know, we could see the outbound tender volume index, the number of loads being tendered, drop by almost 30% in just the 48 hours following the Trump tweet that indeed the higher tariffs were going in place. The market is not only very active, but it's responsive, but it's very visible. Increasingly larger amounts of data are available in real time. That's why the stocks are so prescient or seem to do such a great job of predicting what's happening in the economies, because indeed, historically, that data was only available to the companies moving the goods, but more and more that data is available to anybody if you have the right access.